Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello bulls, the market's in euphoria, continuing its insane move, but we know not to fight this trend unless we have a reason to, and being overextended or the market being manipulated to the upside is not a reason to fight this trend. A reason to fight this trend is significant bear volume or losses of daily uptrends at a bare minimum, keeping in mind that at this point we've seen enough space created on weekly longer term time frames that we can lose daily uptrends. And all we'll do is click one button, zoom out, and look to buy weekly dips. So until we see dip buying stop working, that's the play. Daily bull flag on SPY confirmed. New higher low is 320.15, and we have significantly moved up over that level. So creating even more space for the bulls to maintain this daily uptrend. But for short term, 320 is now the line in the sand for me, where as long as that level holds, the bulls have complete control. IWM, not nearly as strong, a lot more volatility today. We know clear resistance is 167.12, the top. Our bottom of 164.57 did break, but bulls bought that dip, so I zoom in for more details, and this looks to me like an hourly equilibrium is the setup into tomorrow, and we're going to be looking for an hourly lower high tomorrow morning. If we reject from 167.14, we'll then look for an hourly higher low compared to 164.23. I look for equilibriums when ranges have high volatility, and there's a lot of range in between them. If at this point, this bounce on IWM had only seen a bounce up to here, I would not be comfortable calling for an equilibrium because a bear flag would be possible. But it's the size of the bounce relative to the size of the dump that has me watching for that equilibrium to be the most likely scenario. And that's the case on all time frames with when I trade. QQQ, daily bull flag confirmed, 211.16 is our new higher low, gap and run, and clearly the strongest sector in the market right now that I watch out of the major sectors close up at the high, and right now we're seeing after hours action even higher than where we closed. Anything above 211.16 keeps the tech sector bulls in absolute control. And again, you zoom out to the weekly chart, and we could say, well, anything above 199.23 is going to be a weekly higher low. So even if we lose the daily uptrend, as of where we stand right now, we have over 7% of space to also maintain the weekly uptrend. It's worth watching history on how similar moves have played out. We look at SPY weekly chart. We dropped 12% in 2 weeks after a complete euphoria move, end of 2017 to start 2018. Some differences there. The weekly RSI was 92. The current weekly RSI is 75. Back then, the daily RSI was up at about 84 when we marked our top. After that little daily cool-off, the current daily RSI is 75. So not as extreme as we were back then. But as I've said a couple times, when we do finally hit that euphoric top out, I do expect the pullback to be hard and fast, as that's what we've seen in the past, looking for a quick 5 to 10% pullback potentially. But again, need to see volume and loss of daily uptrends to even consider that to be the fact. XLF. So we were watching this daily uptrend, which was the key level for me to be watching this week. And if we were going to see a break of 30.57, then we would take our foot off the gas essentially and be more cautious as bulls in this market. We held daily support by 5 pennies, and now we're breaking resistance, and 31.05 broke to an all-time high for XLF. So just another daily higher low. These two support levels will continue to be key, but as long as they hold, the market bulls keep full control. XLV, not nearly as strong. We will call our daily higher low at 101.27 now, but it does open the door for a possibility of losing the daily uptrend if we were to fail to get back to the top of 103.24, and then if we drop back down and break 101.27. So just like XLF, possibly losing the daily uptrend, it's something to keep an eye on. Would it mark the top of the market itself? Probably not. It would just be, again, something that tells us take our foot off the brake or off the gas, be a little bit more cautious as bulls, as this would be a notable sector losing the daily uptrend if that were to happen over the next few days. Biotech sector trying to bounce as well. 4-hour lower high looks to be set. So we had the big pullback. 4-hour lower high is 96.03, and we did drop to a lower low, but no real meaningful bear follow through on that lower low. So at this point, we have lost the daily uptrend, but we're not in a daily downtrend for me and my criteria until we see a clear enough pivot to call it a daily lower high and then lower low. And we don't have that just yet. More so, the last 2 days show me indecision on XBI right now. The VIX, that's not the VIX. That's the VIX. So a big drop off to end Tuesday and following through today. So looking back down, we've seen multiple bounces, 1170 and 1190. Right now, currently at 1250. So I would expect a bounce rather than just falling straight through 1170. So worth keeping an eye out tomorrow for a potential bounce in the volatility sector, keeping in mind that all of these bounces have been short term as long as the market stays this strong. Gold, continuation. So still riding gold position, and again, I don't foresee changing that for me personally anytime soon in 2020 because we are getting everything that we wanted to see as far as our monthly higher low being set, the monthly bull flag potentially playing out, and at this point we know daily consolidation is due soon, but no sign of it. 9 days in a row with a higher low every day. Resistance is 1535. And when we lose the 4-hour uptrend and the 4-hour exponential support, which has continued to be our guide, then daily consolidation is underway. And you know, after a move like this, a lot of people miss this move and they're sitting on the sidelines patiently waiting for a higher low for their entry. So I do look for bulls to buy the dip. And again, as I've been saying many times, this gold move started with holding sideways while the market was in euphoria and the dollar was showing a ton of strength. Now, this move the last week is following through because of dollar weakness, in my opinion, and we don't have a factor of market weakness at this point, which is favorable for miners. Bull miners love strong gold and a strong market, but if I'm looking at just gold, the only thing that could improve gold's current positioning would be some market fear, because that market fear would see funds leave equities, in my opinion, and head to some metals. So that would only be some additional buying if that were to happen. No sign of it, but just something that could only be interpreted or only be bullish news. There are times where I'm in a stock where I'll know that there's an event that could happen that would be, it has a bearish overhang of news, and for me with gold, this is a bullish overhang, something that's possible to happen and would only benefit, and if it doesn't happen, clearly the bulls don't need any market fear in gold to see strength. Silver, same thing as far as seeing bulls maintaining and preventing daily consolidation at this point. And we would have to see a 4-hour lower high and lower low fail to break 1813 and break 1780 support. Then we would say daily consolidation is underway to look for a higher low to form. I do not consider this a higher low on the daily at 1772. There was not a clear enough pivot. I pretty much just consider it sideways into continuation at this point. Bull miners, so some consolidation today, closing higher than where we closed on Tuesday. We certainly opened higher, and if we look at this on the hourly time frame, I would consider it a loss of the hourly uptrend, and if we're going to see further daily consolidation, it will be with an hourly lower high and lower low. Best case for the bulls would be to wake up tomorrow and be in the mid to upper 35s, and that was when we would look for an equilibrium as opposed to bearish continuation. That being said, if we do get that lower high and lower low, certainly looking for a daily higher low for these bull miners. Just keep in mind, again, talking about overhang, right now a bearish overhang on the bull miners is the fact that gold has not consolidated on the daily time frame, and we've seen a higher low every day for 9 days. So clearly the bull miners are slowing down a little bit and topping out a little bit more, and I know that if gold does see its daily consolidation, which we know is due any day, that would only lead to further minor consolidation as well. Oil, daily higher low was $60. We're looking to see, can the bulls maintain the daily uptrend? At this point they are. It's a daily inside bar. If it breaks bullish over 61.44 tomorrow, our new daily higher low is 60.60. If it breaks bearish, then we have not set the daily higher low yet, and our eyes are still on $60 support. keeping in mind that there is a potential head and shoulders pattern shaping up, where even if we do hold $60 initially, we will be cautious of that potentially taking place. Natural gas has been in full control of the bears, and we're getting follow through. Every single bounce is a daily lower high. This was the red flag right here. We were watching the potential of the daily inverse head and shoulders setup. The setup was there for the bulls to capitalize on. They had to break 2354 to get follow through. They were unable to do so. And that big red flag was right here. And since then, as far as I'm concerned, the bears have had complete control. And now the only support level remaining is the bottom of 2039. And on any bounce, anything under 2288 is just a daily lower high. That's where we stand. Again, caution, we don't want to get, like I said, we don't want to develop bad habits in this euphoric market. We don't want to be playing bullish without stop losses just because we know the bulls are going to buy, and they have been, and it's been bailing out anybody not using stop losses for a long time, but there will come a day where that is not the case, and you don't want to learn a big lesson, and we'll see. Daily higher lows are our guide, and they were a great guide for XLF, telling us that the bulls are maintaining their control for now. Thanks again. Happy New Year. We'll see you soon.